Every time a missile flies across the sky, somewhere a CEO smiles. War has always come at a cost for nations, but for some companies, it's a billion-dollar opportunity. While soldiers shed blood, balance sheets flood in greed. This isn't conspiracy, it's capitalism at its rawest. From defense contractors in the US to arms dealers operating in global shadows, the business of war is not just alive, it thrives. But what if I told you the real money isn't just in the weapons? It's in the fear, the instability, and the endless cycle of conflict that keeps the cash flowing. Behind every conflict lies a network of consultants, financial institutions, and contractors that monetize uncertainty. Insurance firms, logistics conglomerates, surveillance tech providers all find windfalls in war zones. Some hedge funds even trade volatility indexes that spike during geopolitical crises. War isn't just profitable for the arms trade. It ripples through the entire machinery of capitalism. Today, we're going deeper than ever before. We'll expose the corporations, the lobbyists, and the financial systems that turn war into a well-oiled profit machine. And yes, we'll uncover how tensions like India-Pakistan aren't just geopolitical flashpoints. They're carefully exploited markets. Buckle up. This is the untold economics of war. When we think about who profits most from war, familiar names dominate the list. Raytheon, Lockheed Martin, Northrop Grumman, and Boeing Defense. These are not merely arms manufacturers. They are architects of strategic dependence, entrenching themselves in both national defense infrastructure and foreign military alliances. Lockheed Martin's F-35 Lightning II program, one of the most expensive weapons systems in history, has ballooned to an estimated lifetime cost of over $1.7 trillion, exceeding the annual GDP of countries like Spain or Australia. Raytheon Technologies, a global leader in missile systems, exports to over 40 countries, positioning itself as a permanent fixture in global defense supply chains. However, the deeper mechanisms of power lie not just in what they build, but in how they influence what gets built. The political reach of these firms is vast and underexamined. A 2023 report by Open Secrets highlighted that the top 5 U.S. defense contractors spent a combined $128 million on lobbying over the past decade. But beyond dollar amounts, it's the strategic placement of former defense officials and military personnel within corporate boards, a phenomenon known as the revolving door that ensures alignment between military policy and profit margins. For example, nearly half of senior Pentagon officials go on to work for defense contractors, creating a feedback loop where policy increasingly serves corporate interests. This influence is reflected in budgetary outcomes. The U.S. defense budget for 2024 sits at a colossal $886 billion, more than the combined military budgets of the next 10 countries, including China, Russia, and India. Notably, only a fraction of this spending goes toward active combat. Much is funneled into long-term procurement contracts and R&D agreements with the very companies lobbying for them. Yet war itself is no longer the sole profit engine. Today's defense giants are expanding into dual-use and non-military sectors, diversifying their portfolios with technologies that straddle the line between security and surveillance. Artificial intelligence for battlefield reconnaissance, facial recognition software, predictive policing tools, satellite imagery, and cybersecurity platforms now appear in both military contracts and civilian law enforcement procurement. For instance, Palantir Technologies, originally a counterterrorism analytics firm funded by In-Q-Tel, the CIA's venture capital arm, now sells predictive analytics tools to local police departments and immigration enforcement agencies. This convergence of commercial and military surveillance capabilities means that the war economy is no longer confined to foreign conflict. It now permeates domestic governance, urban policing, and border control under the broad and ambiguous banner of national security. The result is a sprawling security industrial complex where the boundary between battlefield innovation and civilian oversight is increasingly blurred, and where the profits flow regardless of whether the nation is at war or peace. War is not merely an episodic windfall for corporations. It is, in many cases, the very foundation of their economic logic. Conflict generates markets, inflates budgets, and drives demand for security infrastructure. A prime example is Halliburton, which during the Iraq War was awarded no-bid contracts totaling over $39 billion through its subsidiary KBR, Kellogg Brown & Root. These contracts included everything from oil infrastructure repair to troop housing. At the center of this ethical quagmire was then Vice President Dick Cheney, who had served as Halliburton CEO prior to assuming office. Although Cheney claimed to have severed financial ties, investigations revealed he continued to receive deferred compensation and held stock options, raising serious questions about conflict of interest and the entanglement of public policy with private profit. This wasn't an isolated incident, but part of a broader pattern of war as business, where geopolitical decisions yield tangible economic dividends for a select few. Beyond traditional contractors, the privatization of military force has expanded the war economy into murkier territory. Private military companies, PMCs, such as Academy, formerly Blackwater, Leidos, DynCorp International, and Aegis Defense have emerged as key players in modern conflicts. These firms provide armed personnel, training, logistics, and intelligence services, often operating with minimal oversight and in legal gray areas. For example, Blackwater's infamous 2007 Nisour Square massacre in Baghdad, which killed 17 civilians, highlighted the lack of accountability and transparency surrounding PMCs. Yet despite public outrage, the privatized warfare sector has only grown, with Leidos alone reporting $15 billion in revenue in 2022, much of it from defense and intelligence contracts. These companies thrive in prolonged conflicts, where their services remain in constant demand but are shielded from the same levels of scrutiny applied to national militaries. Compounding this cycle is the complicity of media and finance, two arenas that shape public perception and investor behavior. A 2018 study by the University of Maryland found that major U.S. broadcast networks receiving advertising revenue from defense contractors were 27% more likely to frame military intervention positively or underreport dissenting expert analysis. This symbiosis between media and defense creates an environment where fear is not only normalized but commodified. Militarized narratives boost viewership, justify budget increases, and ensure that the defense sector remains politically untouchable. On Wall Street, geopolitical instability is similarly transformed into market opportunity. Bank of America research revealed that defense sector ETFs consistently outperformed during 12 of the last 15 major international conflicts. Analysts routinely issue buy recommendations for defense stocks the moment tensions escalate, be it a missile test in North Korea or naval maneuvers in the South China Sea. In essence, war acts as an economic stimulus for the defense sector and its investors, incentivizing a perpetual state of readiness, fear, and militarized foreign policy. It's not about solving conflict. It's about sustaining a profitable cycle where tension becomes a tradable commodity and war a corporate asset. The enduring rivalry between India and Pakistan represents not only one of the most geopolitically sensitive flashpoints in South Asia, but also one of the most profitable. Beneath the surface of cross-border animosity lies a meticulously structured arms market, quietly thriving off each diplomatic breakdown, skirmish, or airspace violation. As the world's largest arms importer over the past decade, India has been on a sustained military modernization drive, with its defense budget swelling by more than 35% since 2016, reaching $73.6 billion in 2023, according to SIPRI, Stockholm International Peace Research Institute. This spending spree has translated into strategic procurement from global suppliers. 36 Rafale fighter jets from France, S-400 Triumph surface-to-air missile systems from Russia, Apache and Chinook helicopters from the U.S., and cutting-edge Heron TP drones from Israel. These acquisitions are not solely responses to military requirements. They are political signals and market catalysts, triggered by the cyclical nature of Indo-Pakistani tensions. On the other side, Pakistan, though significantly constrained by a smaller economy, has adopted a leaner but technologically adaptive approach, focusing on asymmetric capabilities. The country has developed close ties with China, its largest military supplier, acquiring JF-17 fighter jets co-developed, HQ-9 missile systems, and advanced drone technologies. In recent years, Pakistan has also deepened its defense cooperation with Turkey, importing Bayraktar TB2 drones and exploring joint projects in electronic warfare. These investments reflect a shift from conventional military buildup to hybrid capabilities, cyber warfare units, AI-enabled surveillance systems, GPS jamming technologies, and loitering munitions, autonomous drones that hover over a target area and strike once movement is detected. Each border incident, from the 2019 Balakot airstrikes to routine ceasefire violations along the line of control, functions not only as a national security crisis, but as a demonstrative live-fire showcase of new defense technologies. These conflicts are monitored closely by defense contractors and arms brokers worldwide, who often exploit the immediacy of perceived threats to push sales through fast-track diplomatic and intelligence channels. What remains largely unspoken is that these confrontations, though brief and contained, serve as recurring stimulus packages for the global arms trade. Defense firms benefit not from resolution, but from the maintenance of tension. Predictable, controlled, but never resolved. This tension sustains vendor-client relationships, locks nations into multi-year support contracts, and justifies recurring modernization programs. The result is a low-intensity, high-margin market where peace equates to stagnation and escalation to opportunity. Once the smoke clears, the hardware doesn't vanish. It integrates into long-term military doctrine, bolstering arsenals and enabling the next standoff. This loop, political volatility triggering procurement entrenching militarism, is at the heart of what might be called a weaponized peace deficit, a structural incentive to keep the peace elusive and the invoices constant. Modern warfare has expanded far beyond trenches and tanks. Its most consequential battles now unfold in boardrooms, server farms, and a murky global market of privatized violence. Shadow actors like the Wagner Group in Russia, originally affiliated with Kremlin interests, have played pivotal roles in conflicts across Ukraine, Syria, Libya, and several African nations, operating under the guise of plausible deniability while pursuing lucrative resource concessions, mining contracts, and geopolitical leverage. Similarly, Sandline International, now defunct but emblematic of the 1990s rise in privatized military services, pioneered the model of for-profit warfare for hire, intervening in Papua New Guinea and Sierra Leone under complex legal loopholes. These organizations are not rogue anomalies, but indicators of a systemic shift. War outsourced for profit, shielded from democratic oversight. But the evolution goes deeper. Tech firms now sit at the heart of what may be termed the digital military-industrial complex. Palantir Technologies, founded by venture capitalist and political influencer Peter Thiel, has redefined battlefield intelligence through its AI-driven platforms. Deployed by U.S. and allied militaries in Iraq and Afghanistan, Palantir software can fuse thousands of data streams, from drone feeds to satellite imagery, to generate kill chain decisions with algorithmic speed. Its contracts with defense and law enforcement agencies now total billions, and its technologies are increasingly integrated into drone operations, predictive policing, and border surveillance, blurring the line between foreign and domestic war. Meanwhile, cyber mercenaries, companies operating in legal twilight, have emerged as key enablers of silent, transnational warfare. Firms like Kangaroo, Israel, NSO Group, makers of Pegasus spyware, and Italy's Now Shutter hacking team have sold zero-day exploits and digital espionage kits to authoritarian regimes, intelligence agencies, and even criminal networks. These tools allow clients to surveil, disrupt, or disable targets, including journalists, dissidents, and political rivals, with impunity. Investigations by Citizen Lab and Amnesty International have shown that the same tools marketed as anti-terror solutions are frequently used for domestic repression, creating a global industry where ethics are secondary to capability. The most unsettling trend is the commodification of combat software itself. Some companies now lease hacking tools and surveillance platforms via subscription models, effectively offering cyber warfare as a service. This includes packages that enable data exfiltration, infrastructure sabotage, and even remote ransomware deployment. Just as drones are now available through procurement catalogs, these digital weapons can be rented on monthly plans, often denominated in cryptocurrency, making attribution and regulation nearly impossible. Adding to this, companies in the drone and autonomous weapons sector often market their products using real-time conflict footage from places like Syria, Yemen, or Libya, branding their wares as combat-proven. These videos, often shared at defense expos or in investor briefings, turn wars into live product demonstrations, a grotesque convergence of violence and marketing. This shadow industry thrives on opacity and operates across legal, technological, and moral gray zones. It represents the ultimate decoupling of warfare from state monopoly, transforming violence into an on-demand commodity where clients range from governments to militias to corporations. As private warfare and tech merge, the battlefield is no longer a geographic location. It's a subscription model, a marketing video, or a line of code. At the heart of modern geopolitics lies a disquieting paradox. How can a world genuinely strive for peace when war has become one of its most lucrative enterprises? The militarization of capital markets has turned every international crisis into a financial opportunity, where defense stocks spike not despite conflict, but because of it. Following Russia's invasion of Ukraine in February 2022, Lockheed Martin stocks surged over 12% in a matter of weeks, with similar upward trends observed for Raytheon Technologies and Northrop Grumman. This isn't speculative volatility. It's a deeply entrenched systemic reaction that underscores the profitable predictability of war. Large institutional investors, including pension funds, university endowments, and sovereign wealth funds, often hold substantial stakes in these firms, meaning that everyday citizens, often unknowingly, reap financial returns from global instability. A 2021 analysis by the International Campaign to Abolish Nuclear Weapons, ICAN, revealed that over $685 billion was invested globally in companies involved in the production of nuclear weapons, much of it through passive investment instruments like mutual funds and ETFs. Compounding this ethical quandary is the notorious revolving door between government and industry. Former Pentagon officials routinely transition into executive roles at major defense contractors, bringing with them insider knowledge, regulatory influence, and political clout. According to a 2023 project on government oversight, POGO report, nearly 80% of top military officials who retired over the last decade took roles in the defense industry within 2 years. This phenomenon ensures a continuity of pro-defense procurement policies, regardless of changing administrations or threat environments. Policy, in effect, is shaped not by national interest alone, but by shareholder imperatives. War becomes less about strategic necessity and more about sustaining quarterly growth. In response, some ethical investors have turned to ESG, environmental, social, and governance frameworks to challenge the legitimacy of profiting from militarism. Several Scandinavian pension funds, such as Norway's government pension fund Global, have divested from arms producers on moral grounds. However, ESG implementation remains fragmented and often superficial. Many ESG funds still include defense companies by classifying them under national security, thereby bypassing scrutiny. Moreover, global regulatory bodies have yet to standardize ethical exclusion criteria for the arms industry, leaving divestment efforts toothless in the face of soaring returns. Even initiatives like the UN Principles for Responsible Investment, UNPRI, while encouraging transparency, lack enforcement mechanisms to curtail investment in war-linked entities. So the question persists: Is it possible to dismantle a global system where peace equates to economic stagnation? Without structural changes, such as binding international frameworks for arms divestment, increased corporate disclosure, and reforming lobbying practices, the answer appears bleak. War is no longer merely an extension of politics by other means. It is a business model refined, globalized, and largely invisible to those who profit most. Unless there is a concerted societal and financial reckoning with the ethics of war profiteering, the machinery will keep turning and the blood-soaked dividends will continue to flow. War isn't always about defense. It's often a business strategy cloaked in nationalism, executed through policy and measured in quarterly earnings and casualty reports. Behind the rhetoric of security lies an industry that thrives on perpetual instability. Whether it's billion-dollar missile contracts approved during election cycles or covert cyber operations outsourced to private firms, the machinery of war has less to do with protection and more to do with procurement. This isn't paranoia. It's profit-driven logic backed by decades of documented collusion between state actors and defense corporations. If this unsettles you, you're not alone. The same mechanisms drive profit in other industries. Pharmaceutical giants that saw record revenues during COVID-19 while lobbying against generic vaccines. Tech conglomerates in Silicon Valley that harvest behavioral data and auction your digital life to advertisers, governments, and AI labs alike. This platform exists to unravel these intersections, where capitalism, politics, and power converge to quietly shape the world you live in. If you found this insight challenging or eye-opening, don't stop here. Subscribe now, because the truth isn't merely hidden in plain sight. It's commodified, weaponized, and sold to the highest bidder. Let's follow the money together. See you in the next one.